Backdoor Roth IRA script. What if I told you there's a legal loophole that lets you dump an extra $67,000 into a Roth IRA this year, completely tax-free, and the IRS basically looks the other way? Welcome back. I'm about to break down the Backdoor Roth IRA, the strategy that high earners have been using for years while most people have no idea it exists. Let's start with the problem. If you make over $150,000 as a single filer, you can't contribute directly to a Roth IRA. The IRS literally blocks you. Your income phases you out. But here's what most people don't realize. There's a technical workaround that's completely legal, and it's sitting right in front of you. The backdoor Roth is exactly what it sounds like. You're going in through the back door instead of the front door. Here's the basic move. You contribute money to a traditional IRA, which has no income limits, and then immediately convert it to a Roth IRA. Boom. Money's in the Roth. You're funding your retirement with tax-free growth for the next 30 or 40 years. Now, why would you care about this? Let me paint a picture. You're making $180,000 a year. You want to retire as a millionaire. A Roth IRA is the ultimate wealth building tool because everything grows tax-free forever. You never pay taxes on the earnings, but the standard income limits lock you out. The backdoor Roth gives you the keys. Part 1. How it actually works. Here's the step-by-step that takes about 15 minutes. Step 1. Open a traditional IRA if you don't have one. Fidelity, Vanguard, Robinhood. Doesn't matter. Takes 5 minutes online. Step 2. Fund it with cash. Let's say you put in $7,000. That's the 2024 contribution limit for under 50. Just transfer money from your checking account. Step 3. Wait 1 business day for the money to settle. This is crucial. You need the cash actually in the account. Step 4. Convert the entire balance to a Roth IRA. You log into your brokerage, find the conversion option, and boom, it's converted. Your traditional IRA balance goes to zero. Your Roth IRA balance goes up $7,000. Step 5. File Form 8606 with your taxes. This is the paperwork that tells the IRS you did this on purpose and it was intentional. Skip this and you're looking at penalties and headaches. That's it. You just funded a Roth IRA while making too much money to do it legally through the front door. Part 2. The tax situation and pro rata rule. Here's where most people mess this up. When you convert that $7,000, the IRS doesn't care that you already paid taxes on your income. They're going to tax you on any pre-tax money sitting in any traditional IRA you own. This is called the pro rata rule. And it's the silent killer of backdoor Roths. Let's say you have $100,000 in a 401k from an old job that you rolled into a traditional IRA. You also have a backdoor Roth pending. The IRS looks at all your traditional IRAs together. That's $107,000 total. They calculate what percentage is pre-tax money. They apply that percentage to your conversion. Now you owe taxes on that conversion. So the pro rata rule means, if you have any traditional IRA money with pre-tax contributions, a backdoor Roth becomes complicated and expensive. The solution? Don't have traditional IRAs with pre-tax money. Roll old 401 kiloseconds into your current employer's 401k instead. Keep traditional IRAs clean. This is the move that actually makes backdoor Roths work. Part 3. Who actually needs this? Real talk. This is for high earners. If you make under $150,000, just contribute directly to a Roth IRA. It's simpler. No paperwork. No pro rata rule headaches. But if you're making $200,000? $300,000? And you've got a spouse making similar money? Now we're talking about putting away $14,000 a year into Roth accounts instead of $7,000 over 30 years. That difference is massive. We're talking hundreds of thousands of dollars in additional tax-free growth. Let's use real math. You do backdoor Roths for 30 years, putting in $7,000 annually. You average 8% returns from an S&P 500 index fund. You're looking at close to $900,000 in completely tax-free money at retirement. Try doing that with a regular brokerage account. You'll pay capital gains taxes every single year. The difference is staggering. The call. If you're making solid money and you're not using backdoor Roths, you're literally leaving free tax breaks on the table. This isn't complicated once you understand it. Open the traditional IRA, fund it, convert it, file the form. Done. But here's what I want you to do right now. Hit that subscribe button. We break down tax strategies like this every single week. And you're going to want this stuff in your feed. Drop a comment and let me know. Are you using backdoor Roths or is this your first time hearing about them? See you in the next one.